Yes, Gerald Peters. So check it out. Emotions. That's what we were talking about today on the clip. Are emotions bad for your money, or is it rocket fuel? In the early 2000s, I had a CD I used to put out entitled Rocket Fuel. And I was trying to make the case that emotions actually are the rocket fuel that are drive or build or grow or whatever it is you're trying to succeed at. A lot of times when we get into the financial markets, people will talk about this idea that emotions are bad for you. What they're talking about is when you react, what most people refer to as emotionally, they're assuming you're going to make decisions that are irrational or snap decisions, and all of a sudden you sell some stocks. Maybe you don't like who the president is, or you read something in the news, or you hear something freaks you out, and you sell. Go to cash, get out, or afraid to invest. And that's emotions, emotion of fear. I believe that emotions, though, is the rocket fuel that propels people to financial freedom. Financial freedom isn't a one-time thing. It's not something you just get. It's not something in theory, I guess you could buy if somehow you got enough money quick enough. I mean, if you won a lottery, yeah, you could be financially free tomorrow. But often that's not the case, because the process to getting to financial freedom is just a series of decisions every single day. It's just one day to the next day to the next day. You make a series of decisions that ultimately lead you to financial freedom. And it's conscious, like you have to be thinking about it. And here's the thing, it requires incredible emotion. Like you have to get upset about things. You have to get worked up about some things. You have to actually get pissed off at times about you or your situation or how much money you're spending or how much debt you have. You don't eliminate debt by becoming cool with debt. You don't get debt free by being, whatever. You get debt free by getting pissed off about debt. And pissed offness requires emotion. You become an aggressive, good, quality trader in the stock market if you're flipping stocks or what I do, like swing trading. You become really good at that when you get real fucking emotional about it. Like when you actually care if you're successful. When you get emotional enough to make yourself look at 100 charts, or if you get emotional enough to make yourself read a book like my book or any number of 100 other great books on trading or investing. Like emotion becomes the driving force. It's emotion that'll get you out of the ghetto, into the middle class, and then ultimately into the upper class. It's emotion. Some people might call that heart. Now, the industry and the system is set up to tell you, look, you don't want to be very emotional. You might actually not even want to look at your investments. Just put money in there every month. Don't even look at them. Why? Because they're afraid you're going to use your emotions for the opposite. You're going to do the opposite, right? You're going to sell, which would hurt their bottom line. What they should be teaching you is how to get your mind right. Trading is about the mind. Investing is in the mind. It's in the mind. Once you've got the mind part down, once you're ready to do that, the mechanics of the process is simple. You can trade with your thumbs on a phone, like a fourth grader could do that. That's not the hard part. The hard part is getting the emotion to go and open up a brokerage account, to go and read about it. What is the difference between a brokerage account and a 401k or a 557 or a Roth or an IRA or SEP IRA, or like all these different things, these different vehicles, these coats that you can put your investments inside of? Or what is the difference between hard money lending or peer-to-peer lending or business development companies or mortgage REITs? How do you invest in storage facilities? Like, how do you invest? How do you loan your money? How could you become, like, all of these things are available to you, but you're never going to learn any of them or master any of them or get involved in any of them without emotion. Like, you have to get pissed enough to make yourself get off your ass, get on LoopNet, then leave your computer, call a realtor, drive over, look at the house. You've saved the money. You've been saving it. So day after day after day, you were making decisions. I want to buy a rental property. Okay, what do I need? I need a 700 credit score, and I need money. Now, there's people who are going to tell you a different way. You don't need good credit. You don't need money down. They'll tickle your ears and tell you a bunch of bullshit, and some of that is true. That is very true. That's very true. But here's the deal. I don't think you're going to find those deals if you don't have the personal wherewithal and the personal discipline and the ability to use your emotion to force your own self to get a good credit score and save some money. Like, come on. That's the ticket to play the game. That's the ticket to play the game. The ticket to play the game is emotions. Like, you get upset. Like, it should piss you off. You don't have the money to do that. Because that piss offness, which is obviously not a word, begins to stir, and that becomes the emotion. And so if you watch you ever listen to my podcast, I used to do a lot where I would just start yelling because, listen, I'm more pissed about their situation than they are. I know most people are screwed. They're just delusional to the idea. They don't want to talk about it. I know if you're 38 years old right now with debt and you ain't got $1 million, you got problems. You may not know that. I'm letting you know. You have problems right now. And so that's going to take emotion, man. It's not going to laxy-day come to you. The reason your friends aren't millionaires is they're not pissed off about the fact that they're not millionaires. Now, you might say, well, that's not true, Gerald. I'm just not really into money and blah, blah, blah. Becoming a millionaire is easy. It's just a math formula. You don't have to like money to become a millionaire. Science of Getting Rich says dumb people get rich, smart people get rich, tall people, short people, fat people, pretty people, ugly people. Anybody who do things in a certain way consistently over a long period of time, holding thought and formless substance, meaning you're on purpose and point, which requires emotion or heart, drive, whatever you want to call it. You need that shit down inside. So yes, emotions can be bad for money without a doubt. But when you get control of your emotions, when you put your emotions on you, which is what the book Think and Grow Rich is talking about when it talks about persuasion, is you persuading you. You pick you today. You sit down with you in a corner. You don't ask anybody's fucking opinion. You don't ask your wife or your husband or anybody you work for. You sit down in a fucking room in a chair by yourself with yourself and have an honest, real conversation with yourself. Where are you with your money? And where are you with your debt? And where are you with your leadership of building your kingdom at your house? Where are you? And then you respond. You can choose to respond in fear. Or, pillar number 10, take full control of that shit. Take that emotion and harness that shit. That's how you do it, man. Emotion. You got to become emotional.